Hello, we're looking at ticker symbol CLOV, Clover Health Investments. Currently, they have an earnings date scheduled for August 8th, 2023. The earnings call is going to be after hours. They have a 1-year target estimation price of 1.46. We are going to come over here to look at the analysis. There's 5 analysts right here that are covering it. As you can see, currently they have a growth rate of approximately 19% over the next 5 years. We're saying 31% next year. I do think that Clover Health is growing at 15% currently, so that's what we're going to use for our calculation today. As you can see, their revenue estimate for the entire year is currently $2 billion. Next year, $2.11 billion. That's the average estimate. So what we're going to do is we're going to go ahead and come over here to Clover Health and take a look at their assets and liabilities. Their total assets is 1454. Their total liabilities is currently 1130. This is in millions, so that is billions. Their long-term debt is almost non-existent, which is good. They don't have a lot of debt. As you can see, they used to trade at 22.15 in 2021, and they're currently trading at 1.13. So that is way off their highs, which is not anything that we're too worried about because they were considered a meme stock back in the day. We're here to look at the fundamentals that are currently improving. They are not free cash flow positive, but they are seeking to become free cash flow positive. They are a SPAC company. I do look at their quarterly reports, and they are currently trading at a fair value because they are not free cash flow positive, but they are improving their fundamentals, and hopefully they should be free cash flow positive by the end of 2024. We're just going to use an estimation here based upon that $2 billion revenue to go over a discounted cash flow analysis. As you can see, if we go into revenue and profit and we go to net income, as you can see, negative 588. 2022, negative 339. But look, going from this quarter, negative 84 to negative 73 million, which is good because they made some cuts during this last quarter, which we may see some of the improvements in quarter 2, but I really know that we're going to see those improvements in Q3. So Q3 and Q4 are going to be huge to show us what 2024 is going to look like. Currently, I do expect them to improve upon this a little bit. I would like to see this go to about negative 65, at the minimum. That would be a bare minimum, but I would really like to see it be at least negative 60 to know that we're really moving in the right direction. But Q3 is going to be way more important than Q2. The only thing that Q2 is really going to affect is the trading price, and currently Clover Health just became compliant in the NASDAQ again, so that's good because it resets the timer. They only had until October to regain compliance. We're going to look at the shares outstanding here. We're going to see that they're 479. I think it is 482. I did look somewhere else for that for the current shares outstanding. Their EPS, as you can see, the last quarter, negative 0.15. I am hoping to see that hit at least negative 0.12. But if it would hit negative 0.10, that'd be amazing. But I guess it's just, wishful thinking as an investor, always wanting to see the best possible results. It would be pretty disappointing to see anything higher than negative 0.12. But I'm really looking forward to quarter 3. So we're going to come over here to our intrinsic value. As you can see, I did 5% of 2 billion, which is 2,000, so 100. It is 100 for our calculations. We're using a 15% growth rate, 10% discount rate, 2% perpetuity, 482 outstanding shares. It's going to give us a discounted cash flow, no discount, 680. The bull case 612, a bear case 544. Base case, bear case is 461, and recession case 381. I do like to use these numbers because it gives me more protection and more discounted rates to the typical calculation right here. And it's been pretty successful for me. I am currently beating the SPY for the year, so I'm pretty happy about that. But I also feel like most people that are investing in technology. But I also am selling some of my technology, especially Microsoft, because it's really highly valued right now, and you can never lose money taking profits. We're going to go to my aggressive discounted cash flow calculator. Right here, we're using a 10% discount rate, 3% perpetuity, 15% growth rate, and 100 free cash flow, aka 5% of $2 billion. And then we're going to get a price of 10.49, 9.44, 8.92, and 8.40. So as you can see, this is just a discounted rate of this calculation right here, and I've put that right there. It does give me more margin of safety if I was to invest on this aggressive model. I'm sorry I did not change this, as Apple is the last one that I did. This is Clove. And the NAV calculation here, 1454 for total assets, total liabilities 1130. This is billions. And well, it's in millions, but this is marks a billion. Total shares 482 million. We get 0.67, so 67 cents is their NAV asset. And let's see, if we go back over here to this, if you want to do an 8% discount rate, not be as aggressive and not have more of a margin of safety, you can see it's just going to change the calculations a little bit. So the recession case in this case is 548, and the no discount is 9.59. So if we were to look here at my average intrinsic discounted cash flow value, we'd get 7.58, which is right around the base case. So as you can see, it's kind of fun that the average of this one and that one, I think, becomes this one. And you can just see how similar all the numbers are. But I do like to go off this one because it gives me more margin of safety. It's very nice to look into. I'm more of an aggressive investor. I'm not really someone that's going to be like, ooh, recession case, I'm not buying it till it comes down here, because guess what? I can't time the market. I really like Clove, and I think this is going to be a company that grows into the future. They have a new financial chief officer over the last year who is going to be important for the company, because he used to be at Soterra and they grew at 8% per year. Why would you leave an 8% growing company year over year to come to Clove, who isn't free cash flow positive? Because he sees something there. He knows what Clove can do. He wants to help get there, because that can really grow his pockets as getting stock while working for the company. So that's some of the things that I'm seeing and the things that I'm believing into. This is just a quick analysis just based upon the fundamentals. These are going to improve, and I can't wait until 2024, because I really think we're going to be free cash flow positive by the end of 24, and if not, the beginning of 2025. And it's going to be beautiful, because once they reach free cash flow, the stock is going to rise, and when the stock rises, the financial institutions are going to grow their investments in this company. So I really think that Clove is my beautiful baby in the making, the one stock that's going to make me a millionaire, hopefully. It is 25% of my portfolio, and if not, well, it's a learning opportunity. That's what investing is all about. I do something I want to make note of is, if you come over here, it shows you that if you want to follow the earnings call for Clover, you can get in at investors.cloverhealth.com, and it's scheduled for 5 p.m. Eastern Time or 2 p.m. Pacific Time, so you don't have to do the math. And it's going to be beautiful, because Clove is also trading at a 3.5 star rating this year, and there are some people that think that Clove has the opportunity to become a 4-star rating next year. Will also help improve their numbers. They're a great business, and a lot of people don't know if they're going to be able to become a company that sells their data monthly, and what I mean by that is they're not going to become a company where they're able to sell their technology to doctors to help them monthly. So they would have monthly revenue coming in for the company, which would help their cash flow, aka a SaaS company, which is something, if you don't know what it is, you should look into it. I do think that Clover Health has an opportunity to change the healthcare world. They have already shown that their data has been successful in diagnosing diabetes early and stuff like that. So if they can really showcase that their data works, that's going to be a beautiful thing for Clove investors, because they're currently trading at 1.13. And we can take a look at the chart real quick here for Clove. Like, look, let's go over here to Clove. We'll take a look at the technicals currently. So on the 1 day, look, they're strong buy, because they've been consolidating lately. If you go here on the 1 week, neutral, sell, buy on the moving averages, and this is what I'm talking about. The moving averages, we can see the simple moving average 10-day 0.96, the 20. But let's go down here to the 200 simple moving average. Oh yeah, I don't pay for it anymore. Oh, I'm not logged in. Okay, but the simple moving average, we've already moved over to 200 moving average, and we just need to hold it now. If we do go up here, and we'll go to the overview, which will show us the chart. See, I've been holding this range very, very well over the last trading day. But the 1 week sell neutral moving averages buy. 1 month the moving averages are still a sell, but look, summary neutral oscillators, they're a buy over the month. So Clove is getting there. So this is going to be very interesting to see what they do and where they end up trading at, because right now they're hovering around that 250-day moving average, and if they can consolidate around there and build the bottom, it's only up for Clove if they have a good earnings. So that's something to take in mind if you're a short-term investor. But thank you for this, my analysis for Clover Health Investments, and let me know what you think about the company.